Hello and welcome to the status report overview for SKAGEN Global in February. Let's take a look at the highlights for the month. The fund increased by 3.4%, outperforming its benchmark by 0.7% on a relative basis. Year to date, the fund is down 0.4%, 1% behind the index. One new company was added to the portfolio and we increased our position in another. We reduced the size of our holdings in 2 companies and the fund currently consists of 102 companies. The cash position fell during February from 2.6% to 1.8%. Valuations of equities generally remain attractive, although some sectors and geographic areas are now seeing valuations above historic averages. Our portfolio remains attractively valued in absolute terms and relative to both the benchmark and the fund's historic average. Now let's take a look at the month's contributors and detractors. Samsung Electronics, the fund's largest position with an 8% weighting, was the standout performer during February, as its share price increased by 11% in local currency. The Korean electronics company launched its new Galaxy S5 during the month, the latest upgrade in an important product line for Samsung, which contributes around 25% to group operating profit. REC Silicon, a 0.5% position in the fund, was the second best performer, as it announced a joint venture in China. The solar company's agreement was well received as it enables REC to expand capacity and enter a high growth market with limited capex requirements. On the flip side, Gazprom was the biggest detractor for the fund, down 7% in US dollars, as the Russian market was amongst the largest fallers. 2 US companies, Citigroup and General Motors, were the next worst performers during February. Now let's take a look at the portfolio activity during the month. Sanofi was initiated as a new investment. After disappointing earnings development in 2013, we believe the pharmaceutical company is set for a new growth phase, mainly driven by its diabetes franchise and strong foothold in emerging markets. The current valuation, with the company trading on a forward price-earnings multiple of 13.7 times, seems attractive given our growth expectations for the next few years. Elsewhere, we added to our holding in Storebrand in connection with the placement of the 20% stake held by Gjensidige. We believe the Norwegian insurer is amongst the most attractively valued life companies in Europe, and the transfer from guaranteed to non-guaranteed products, combined with cost-cutting and scope for higher bond yields, should lead to higher profitability. On the sell side, the fund's position in Ensco was trimmed further and is now 0.5% of the portfolio. We also cut our holding in Tyco International as its valuation multiples have expanded significantly. We still see Tyco growing net earnings by between 15% and 20% in the coming years, but after share price appreciation of around 50% in the previous 12 months, much of the growth expectations seem already priced into the current share price. Finally, a quick look at the fund's top 10 holdings, which together represent approximately 1/3 of the portfolio, and we can see how attractive current valuations are. The companies trade at a weighted 2014 price earnings of 8 times compared to the index, which trades at 14.7 times, and we believe there to be around 34% upside based on our current target prices. That's it for this month. For more information, please visit the SKAGEN Global section of the SKAGEN website.